Welcome to today's episode of Credible Perspectives, a podcast by Credence Africa. Today we are joined by Miss Monicah Mwaniki, the Chief Executive Officer of Arvocap Asset Limited. I got that right, yes? The first take. Awesome. In today's episode, we are discussing why wealth is a woman's right, and we are here to hear from you. One, your life story, and two, how you're building this community and how you're helping women build their wealth. So, Madam Monicah, how did we get here?
Thank you so much for hosting me. My name is Monicah Mwaniki. I am the co-founder and CEO of Arvocap Asset Managers, a regulated fund management firm by Capital Markets Authority. When we speak about wealth and women, I feel like these are synonymous.
Mm-hmm.
However, it may not just come out as synonymous as they are. Because when you look at the society, the real wealth generators, the real builders of wealth from grassroots mostly are women. Be it the toiling, be it the marketplace where they are selling goods, they are the ones making sure that the economy is moving. They're the ones tasked on bringing at least the daily bread or the daily food at home. So really, it starts from there. Going on and building the case to children growing up. And yes, the man is working and bringing what he's getting to the knowledge of the woman. It is up to the woman to give guidance and support on where the money or the income should be invested or at least kept in a safe way. And women are good nurturers, so they instinctively are able to pick a safe place to place this capital.
Okay.
Further on the road, when the children are mature, and now it's about legacy. How do we transition this wealth to the children? Again, women find themselves at the heart of it. And looking at it, women are there longer. I mean, statistically.
Yeah.
And most women are left with all this property. And how do they now nurture this wealth? So when we start talking about wealth, really, you can see how intertwined women are with the wealth. Not just to say that they're the only ones who are building it, but they play a big role in reinforcing wealth and transmission of this wealth.
So what is your definition of wealth?
Well, what is wealth? Wealth is both.
What's your definition? Don't worry about the accepted definition. What is yours? How do you define wealth? Is it money? Is it education? Is it financial freedom? Is it skills? What do you define as wealth?
I think wealth it's a big word, and we cannot be able to say that wealth is this asset or this amount of money.
Yeah.
It's a packaged owing or what you would say that this is what I own or this is who I am. It could be knowledge, it could be experiences, it could be money, business that you're running, family. It's really a
multifaceted idea from where you sit.
It's a ballpark. It's a full loaded what you can say you own when you were to do. Let's say you did your personal balance sheet and you're doing how much am I worth?
Yeah.
How much is my business worth? How do I relate with my family? What's my education? What's my experience? My social circles, my social capital, all that married together bring what is wealth.
What is wealth?
Yeah.
Okay. So when we say that wealth is a woman's right now, it's one of the biggest conversations going around the country, the world. What do you understand by that?
We mean what I understand by that is they need to take charge. Women need to take charge of this. Rights are not just there predisposed for you to enjoy. You have to fight for rights. You have to fight for your rights. And at the core of wealth, as we have initially said, are women. But it won't come easy. We have to be ready to fight for this. Be it in the social spaces, how are you speaking up? Be it at the wealth making table, what's your contribution? Are you equipping yourself with the right skills to ensure that your voice is heard? Yeah.
Okay, so then based on what you're saying and having introduced you as the yourself as the co-founder and CEO of Avocap, how was Avocap born? What gap did you see in the market, or what did you see women lacking that made you decide this is something that I must do?
Rightfully, when it comes to the topic of money and finances, there are a lot of jargons and there are a lot of risks. And women look at this and see like this is a very risky space to be in. They also feel they are less equipped with information to make these decisions. Again, they are also afraid to lose. So they are very cautious. All this may look like not an advantage to the women. We'll delve deeper to that on how this is a positive. And so when we were co-founding this, what we were trying to solve is how can we make decision-making on investments, on finances, easier and accessible to women. So we have made investments readily available. We have equipped women with tools to make decisions, information, so that they can be comfortable in this uncomfortable space of making money.
So with what you know, and when you say that women are really the core of how wealth is made or how we determine wealth, I want to hear from you to understand how women can leverage the skills and the knowledge they have to make money. And this is now, I'm sure, your favorite part of this conversation, invest in this money. So it begins from the skill to the making to the investing and or saving.
Let's first analyze the traits of women. So let's look at the positives. Women love many options. So if you look at a wardrobe of a woman, shoes, you'll have like 20, 30 pairs of shoes. If it's tops, you have so many of them. Handbags, the same. We love variety. And that should be used as a strength to help us create a portfolio. Why don't we, even when it comes to investment, we do the same? Create a portfolio which has a number of investing options that you have taken up. This brings the same, makes you feel comfortable in your space. Number two is women are very cautious. And cautious, I mean, they fear losing what they've already gotten. That hinders them from investing because they are scared that when they put this money in that, it might collapse or they might lose. So this trait can be reinforced by equipping women with information. And we have come in a big way, creating literacy around women. And I love what Credence is doing. Just coming into the space, calling women, calling experts, talking to them. And so when the women are making a decision, they know how to check, even for a credible investment option. The other thing is that we are emotional. We are emotional beings. That's us. And this is also another trait that can be used well to augment our investment skills. So this is to mean that there is that, we call it the sixth sense, the intuition. When you just be confident and listen keenly, you'll be able to decipher what is a good investment and which one is not. Of course, there are telltales of the right and the wrong investment. So let's use that also as a strength so that we can be able to understand investments. Again, it becomes a strength when it comes to investments volatility. You will find women are less likely to sell off massive investments when there's volatility compared to our counterparts who will, in the process of being very overconfident, sell out, and count your losses.
Yes.
Women will hold on a bit. They are a bit persistent and resilient. Hold on a bit and market that the time all goes and they're able now to make their money. So really, women have very solid traits that if they only believe in themselves and use those as their strengths, that we say convert your weaknesses to be your strengths. Look at the strength that lies in a certain weakness. And this will really equip us in being confident on the table, making decisions on money. Yeah.
Are you saying that women are very risk averse or only take up low risk investment options?
Yes. That's how studies have shown. Yeah.
Shows.
And they only want to invest in the known. Really, they may not be quick to want to invest in the unknown. Yet markets are changing, times are changing, new products are coming up, new spaces of investments, accessibility is there. So if we could shift our mind a bit and be ready and acceptable to change, to risk, let's work on our appetite. You see, this thing called risk, and when we say the risk profile of an investor, it is not a feeling. It is not a, how do I feel? I feel like I can take risk, or I don't like risk. It's a measurable parameter, because if you have a good foundation in your investments, you are able to take up a riskier investment because what you're risking is a very small portion of your investment. And these are the opportunities we call wealth creators, because they could have a high risk, but then they could also make you good returns that will leap you further, faster, compared to always taking risky options because you feel you can take risk. By the end of it all, there is not much you have to show. So it's good to assess yourself, or even walk a journey with a wealth advisor who can be able to tell you from the analysis of your investments, this is how you can absorb risk. You are sitting on the red. You are safe. And that knowledge or that clarification will help in a long way.
And these are services that Avocap provides.
Yeah.
Okay.
We do offer these services at a personal level, at a group level. We are doing a lot of these services with chamas, with investment clubs, with individuals, with families. We are now sitting with a family. We've seen and helped families even set up a family board, where we will sit down, the reports are out. This is how our portfolio fared. This is how the business has fared. This is how our portfolio on bonds fared. So there is help and there is a solution. And let no woman feel alone in this journey. Let no woman get TikTok advice alone and make decisions on that. It's good to filter and know
what works for you,
which is what and what is which.
Okay. I like that you've raised TikTok. I want us to discuss Gen Zs and their money behaviors. What have you seen? How do they behave out here with money?
I think Gen Zs have come to revolutionize the spaces and not just the streets, but also the investment spaces.
Okay.
This is a group of people who are very, very active in looking for information. They are also very curious and are able to dare, so I may call it. So you will find that they're even asking you questions beyond the normal information you give typical investors. So you can tell they have some depth in investments. Maybe they may not just know the perfect place to land or how to position where they are going. And we come in and are able to help them around this. But this generation will be a generation that will make a lot of changes in how we view wealth investments in a few years to come.
Okay.
Yeah.
So what advice would you give women when it comes to investing? Where do we begin? Where do we start? There's a lot, like you said, TikTok advice is a lot. So you'll be told, buy bonds, invest in a money market fund, create an emergency fund. There's a lot of information going on.
Yeah.
And some could be true, some could not be true. But from your expertise, where should a woman begin with her money? Is it saving it, or is it investing it actually?
I'm sure most women have already begun. So we won't say where do they begin. Is how do they reposition their investments now going forward with the knowledge they have. First is to do an assessment of where you are invested. You will need to do an audit of yourself to find out everything that you call an investment, be it land, be it money in the account, be it savings account, be it bonds. We do an assessment. You can do it yourself. We can help you. Do an assessment of where you've invested. Second, how do you optimize what you already have? So you need to ask yourself, why do I have this money sitting in a bank account? And I'm calling it investment, getting in a savings deposit account, which is giving you small returns. Or why do I have my huge portion, like almost 80% in a money market fund? So this will help you to start optimizing your portfolio. And this is guided by your objectives of investing. What do you look to achieve in the fullness of time? If you're a young mother who has children, you will be looking at their education. If you are an elderly person, you may be looking to work on a retirement home, maybe. Maybe you're also working on your retirement. You see, those are long-term goals, So you cannot put those in a money market fund. You cannot put those in a bank account. You cannot put those in a risky venture. So understanding your objectives helps you match them to the right investment vehicle. Again, this is what we do best. So let me go to the investment options that there are and which ones are suitable for short-term, for long-term, and also for wealth creation and wealth preservation. So the first asset class I will talk about is money market funds. So money market funds are short-term investment vehicles. This is to help you manage your cash flows. There is school fees that is due to be paid. There is a holiday you're planning for yourself or for your family. There is emergency fund. And emergency fund is you understand your needs as a family or as an individual for a full month. Multiply that by 6 months. That is a figure you should have somewhere safe, knowing that in case of an emergency, you have buffer to last you for the next 6 months without changing your lifestyle. Of course, this is not an amount you need to have today, pap. It's an amount you aspire to grow towards too. Then from there, we're able to level you up to medium and longer term investments. This is to measure up to your longer term objectives and goals. So here we will have investment in bonds. Bonds are safe and low risk. They're able to help you grow your wealth towards longer term goals. At Avocap, we have gone a notch higher and created a bond fund. What we are trying to do is help investors, in this case women, invest at whatever time they are comfortable. So entry is at any time. You don't have to wait for a primary auction or a bond to be available in the market for you to buy.
Okay.
And you can sell anytime. You can also be able to enjoy higher returns because we as the experts will be trading the bonds. We will be reinvesting the coupons, unlike you being paid the coupons. And this helps you attain your goal. So you can certainly be sure that you will be able to build that home or you'll be able to take your child to that university in such an investment vehicle. We also have other investments like stocks or the so-called equities. Equities are very good for long-term investments. We actually say in the long run, equities outperform bonds.
Okay.
And we can be able to take advantage of this through still Avocap funds, which have equity funds.
Okay.
You can choose either local equities, African equities, or even global equities.
Okay.
So these are 3 different funds. And also for the Sharia compliant investors, we do have a Sharia compliant equities fund.
Okay.
So these offer an option to augment the returns of an investor. So of course, while you're creating a portfolio, we've said you need to anchor your portfolio in such a way that it will be able to absorb the shocks that come into the economy. So a good portion should be in bonds, and then another portion, maybe 60% should be in bonds, 60 to 70% in bonds, then 40 to 30% should be in other asset classes.
Okay.
So like the equities, all the multi-asset strategy funds, which offer you another diversified access to different other assets that are available, both and mostly in the international markets.
Okay.
Yeah.
You know, it's interesting that you've mentioned all these funds, but you've not mentioned anything to do with real estate and land and houses, and it's a dangerous hole to go into, but we really need to discuss it because a lot of us grew up knowing that your number one investment. I know you've heard or you've seen even on X people saying, "Mnasema nunue nyumba na when it rains, I can't even leave my gate because it's flooding," or there are such ridiculous stories. What's your take on that? Is it part of diversifying our portfolio, or must we have real estate in our portfolios?
Real estate is a good investment asset to have on your portfolio, but most people approach investment in real estate the wrong way because you will buy land. Chances are, and many a times that I meet investors who, when I give this possibility, they are like, "That's actually me you're talking about." They've not even gone to see where that land is. It was just an advertisement they had. It was sounding cheap and they bought it. Let's even say you've gone and seen the land. You buy it and hold it. For many years, the land is appreciating in value. But remember, you are not an institution that values and are able to account for the gain in these assets in something like a balance sheet. So it's just as good as the face value of that land because you cannot derive the value in this land out. You cannot also be able to use it in case of an emergency. So the strategy around real estate would be you approach real estate as an investment. So drop the emotions.
Okay.
We attach a lot of sentiments to land and to real estate. And opportunities come for you to exit, but you still want to hold on to it. Let me wait for it to still add more value. But if you are approaching it as an investment, when you buy land, you will start looking for opportunities to sell. And when it comes, you will sell and buy another one. And buy and sell and get another one. So in the fullness of time, you will find that in a span of like 10, 15 years, you've really made a lot of money from real estate. Unlike if you would have bought and held that land. Another shift that is happening is the next generation, even already the Gen Zs and I'm sure even now the Alpha and the other generations that will come are not appreciating these assets or this kind of investments. I've met a lot of investors who have told me that I try to call my kids, we go to the farm so that they can see the farm, and they have no interest. Another investor told me that the son was actually asking, why do you have this land? Why should you hold this property? For what purpose?
Yeah.
You know, again, there's also another upcoming trend of young people going for higher education out of this country, abroad, and chances are starting their life there. So maybe they'll come back later or not. So when you give them such an illiquid asset, you can imagine how much you're devaluing the value that you are creating right now and not using that value. And that's why we are edging investors towards liquid or almost liquid investments. Investments that, one, the value that they are making, you're able to derive or utilize that value in the present or in the anytime you need it. Second, you're able to quantify it because, like, even when you look at land, you will hear people telling you, I know my plot that now they are selling at, you bought it at 1 million. Now I hear they are selling at 3 million. Here. When you get to the ground and say, now I want a buyer of that 3 million, you'll be shocked. Maybe it's a paper value or it's a mental value perception. On the ground, the person who will come, maybe they'll come with 1.5, 1.8. And at that time, you're thinking, let me hold on because I know I'll get to 3. There's already a figure that has been planted in your mind. Hardly will that figure come. And so we have a lot of people stuck in this kind of investment. So it's good to start shifting, be alive to opportunities to exit some of these positions. There are investors who are making a lot of returns from real estate. Capital Markets has also created an opportunity for investors in rates. Rates are assets that where we have real estate put together and there is a manager who will either distribute the rental income that is coming from those assets or those real estate to the investors. So there is a smart way to approach real estate.
All right. Okay. So a fun question for you. Having lived in Nairobi as long as you've lived, have you been conned yet in this Nairobi?
Yes. Is there anyone who has not been conned?
I'm sure there are.
Maybe they're the fewer because what I say is losing is part of the game. Let no one cheat you that there is a game that doesn't have losing. Even relationships, you will win some, you will lose some. If it's opportunities, if it's purchases, if it's businesses. So let's, first of all, not beat ourselves too hard. But after that happens, that should be your awakening call. You should now pause and breathe and know that that is not the end. Let's soldier on. But now wiser, whereby you don't invest for trends because most of these con games come, most of these people are referred to by a friend or by someone. And someone tells you, me, I've invested with them. I can vouch for them. And right there, you just jump in and do the same. It's good to be referred, but it's good to also do a quick due diligence. So when you're doing due diligence, what do we mean? We are telling you to ask, what are you investing in? As simple as that. When I give you my money, where do you take it? And if the answer is not very clear, then please step aside. Investments is not an emergency. Number 2, ask, are you regulated? Who regulates you? So there are many regulating bodies. We do have regulators like CMA, of course, for us, mainstream. We do have CBK that regulates if it's, let's say, a microfinance that was telling you put in your money and we're able to lend, you'll be able to ask who regulates you. And so maybe there's a regulation body. There's SASTRA, which regulates SACCOs, and IRA. Yeah.
I'm smiling and laughing because of SASTRA. Do we want to go into that conversation? But basically what I'm trying to ask is, how do we also protect ourselves from the regulators when or if the regulators fail us, as has been the case with SASTRA?
That is a big box we are opening, and I'm not sure we'll be able to finish.
Okay.
But what we are saying is this, how I will answer that question is this way. As long as you've done your due diligence and you're comfortable that I am confident about these people, then even if they went down, you will not be 100% so guilty to yourself that you did not do the due diligence. You did not do at least a bare minimum. Second strategy is don't over-invest in one area.
Okay.
Diversify. Diversification is a big plus, and that's part of a risk management framework that institutions use, individuals use, such that even if it was to go down, only a small percentage of your portfolio has been hit. And doesn't mean that you'll be comfortable or happy, but at least you'll be able to absorb and work towards restoring what has been lost. Where were we?
Due diligence,
yeah. So remember, after you do your due diligence, there is now what we said, goal investing. The moment I understand my goals, that I am investing in this bond fund for my child's education, higher education, full stop. The moment I see a very rosy investment out there, I will ask myself, for what goal? What's a goal? What's my objective in investing here? To see whether I can make quick cash. Okay, how much am I willing to lose? 10,000. Place it. If it goes, you will know there was that option. Because your goals have already now been matched to the right investment vehicles or channels.
Okay.
Yeah.
Awesome. So what I'm hearing from you is, one, women need to invest in knowledge.
Yes.
Invest in knowledge so that they can know what areas they want their portfolio to look like.
Yeah.
I'm also hearing you say that women need to be very clear about their goals.
Yes.
They could be as big goals as having a home or a retirement home, or they could be quick wins or the low-hanging fruits, like having a certification in something.
Yeah.
And then I also hear you say that we also need to invest in our skills. Not just knowledge, but also skills.
Yes.
Right?
Yes.
All right. Okay. Awesome.
When it comes to knowledge, I don't want to make it sound that you need to register for courses and start going back to school. No. It means just expose yourself to research materials. Maybe commit to read a finance article every week.
Okay.
And they are readily available. There are so many, even on the daily newspapers. There are, if you open Business Daily, you will pick something. So expose yourself to a lot of this. Even on these social medias, follow the right people. Follow the right channels. You will be able to get a lot of this knowledge freely.
Okay.
Yeah, and in a simplified way that drops the jargon and the technicalities and sieves to you what now this means. Yeah.
Okay. All right. Finish this sentence for me. A wealthy woman is?
A wealthy woman is a happy woman.
I love that. I really like that. Okay. So as we wrap up this episode, what parting shot do you have for women specifically, and as they advocate for themselves and fight for their rights, like you said, especially with this in this wealth sector, what do you have to tell us?
What I would want to tell women, my fellow women, is start taking charge of your investments. It is taking charge of your future and of your generations to come. And this is what will leave a mark of your existence on this planet. Thank you.
Thank you. Where can we find you?
You can find me across the socials.
Mm-hmm.
You can find me on I give my social handles.
Yes, please.
You can find me on Instagram, Mwaniki Moni. You can find me on LinkedIn, Monicah Mwaniki. You can find me on Facebook, Moni Mwaniki. You can reach me directly from Avocap Asset Managers website. Also on our WhatsApp lines and direct calls. I'm readily available. Glad to sit down with you and help you build your wealth.
Thank you. Thank you so much for coming and for sharing all the insightful knowledge that you have shared with us today.
Thank you so much. Thank you.